title insurance is a must. Let me define it, tell you why it's important, and if you should be the one that pays for this at the closing table when you buy your next property. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, and longtime real estate investor. The title to a house or property, that's the document that proves that the owner owns it. And without that proof, the house can't be bought or sold. Title insurance is written by title insurance companies. What a title insurance company does is research the history of the house to see if there are any complications, also known as clouds, in its ownership. Issues that cloud the title could be like an outstanding old mortgage that the prospective seller still has on the property, a previous deed that wasn't signed or wasn't written correctly, an unresolved legal debt or levy by a creditor, like an old lien placed by a contractor who once did some work on the windows and was never paid for it. They are all examples of clouds on a title and make transferring the property ownership, therefore, difficult or impossible. But if the title appears to be clean, no clouds, then the title insurer writes a policy promising to cover the expenses of correcting any title problems if they would happen to get discovered after the sale. Title companies may refuse to insure a clouded title to be transferred, so it's important to know about any potential issues as soon as possible. Now, there are two types of title insurance: lender's title insurance and owner's title insurance. First, lender's title insurance. In most areas of the country, the mortgage lender requires that the property buyer purchase a lender's title insurance policy, and that is to protect the lender's security interest in the real estate, protecting their collateral. Lender's title insurance is issued in the amount of the mortgage loan, and the amount of coverage decreases and finally disappears as the mortgage loan is paid off. Then, secondly, owner's title insurance, it protects the home buyer's interest, and it is normally issued in the amount of the purchase price of the property. Coverage means that the insurer will pay all valid claims on the title as insured. In most real estate transactions, separate title policies are purchased for the lender and the buyer. The buyer typically buys the policy for the lender, whereas the seller often pays for the policy for the buyer. This is the third video in our Explained series, where I take one real estate investing concept and just break it down very simply. The next one, the fourth one in this series, will be back to making money again, just like the first two videos of the series were. If you want to see more, when you subscribe to the channel, be sure to hit that little notification bell. That's the only way you'll be assured of seeing the next Explained series video. I'm Keith Weinhold. I'll see you next time. You can watch this one next.